May provided a reprieve for investors, as a late-month rally in both equities and bonds recouped much of the losses seen early in the month. Despite the year-to-date declines in equity and credit markets, they have only made partial progress to pricing the economic slowdown that is taking shape around the world. In particular, this slowing growth narrative has finally begun to be reflected in widening credit spreads. However, the compensation paid to U.S. high-yield bond investors in particular remains short of the spread levels seen during economic slowdowns, let alone outright economic recessions. While this suggests that our fixed income hedge fund strategies remain attractive, continuing widening in spreads may pose a headwind to convertible arbitrage strategies, in particular, likely requiring repositioning in the wider alternative space. The late-month rally in equities, though impressive, is consistent with bear market rallies seen outside of recessionary periods in the U.S. as far back as the 1950s. In fact, though the current bear market is approaching the depths seen in historical bear markets outside of U.S. recessions, each of those market declines ended with the Fed stopping its tightening cycle, something yet not in evidence in the months ahead, we expect. As a result, the current bear market rally offers investors an opportunity to recalibrate exposure in light of the changing economic backdrop. In particular, investors should focus more closely on the likelihood that earnings expectations, which have remained firm all year, begin to see downgrades moving into year-end. Economically sensitive companies and heavily leveraged companies should be most exposed to such downgrades, we expect. Healthcare and pharmaceutical companies, in contrast, should provide some relative shelter against such downgrades. Overall, despite the sharp declines in equities and corporate credit seen in recent months, markets continue to underprice the slowing economy and progress. The late May rally in equities and credit provides an opportunity for investors to prepare for the next stage of this slowdown. For more details on how we're taking advantage of the current bear market rally, please visit us on ubp.com.